CV down through open upst. Cutting a little bit upst down through open. Also CVS coming into pre-market highs. Adding a little piece upst. I'm gonna 2 bar break this now.
TVS is showing strength.
It's near the market high.
Might take some INTC on prior bar breaks.
Closed a little bit on my UPST down through open into pre-market break. Holding the rest for 2 bar break now.
Watching CPS for an EMA. Got long INTC.
UPST volume picking up. Sold more into that 88s, well 8760s. I'm watching CVS, but I'm just waiting for a pullback. I like this steady grind. Letting it set up for me. Alright, I'm also watching Baba here. Also gold, GOLD, like steady move up. Looking at it in the 2 minute. Let it set up, maybe a hitchhiker, 9 EMA. My watch for me right now, it's UPST for the second trade and CVS. UPST also coming into daily resistance. See if it breaks over or I'm selling into the here just in case. Alright, sold a little more. I'm holding a piece. I'm in from 86.
Did you get the INTC explosion at the opening? Now we're having like the backside there.
Oh fuck no.
Yeah, I took the turn.
Nice.
Tesla at pre-market high.
I want to see INTC pull back instead of for maybe a backside or something. I missed that. I was watching UPST.
In CVS also the last
CS
names that
pulling
you
back
mentioned are
CVS.
working well.
Yeah,
Yeah.
CVS. I'm looking for that
and
pullback into
9.
pre-market or the 9. So we'll see if it breaks 30, 63.50s a minute.
Well, it's
Tesla broke
9:42, so I don't like it for the 1 minute.
Tesla broke pre-market high.
Qs are bouncing. Okay. Yeah, I don't like Intel as a long that much. The way that it's set up. Price underneath the 9. This could be a 9 EMA rejection.
CVS selling a lot.
I will be waiting for that IMA. In CVS. Damn.
INTC backside.
Yeah, CVS in the 1. And look just straight down.
I don't like it.
I'm looking at it in the 2, and the 2 paints a different picture. Above earning. I'll take it if it breaks out of highs. Mm-hmm.
He was just in the yesterday the market lows. CVS high.
I added long in UPST. I'm risking the break.
INTC at view up. I
So
like
UPST
how volume is
breaks
increasing, so add it on UPST.
Yeah. NTC can go. Isn't holding that?
Alright, I'm long some CVS there. If we break 63.50s, I'll add again.
CVS looks strong. Still holding INTC. I think if it gets back over its highs over VWAP, this could really we put an open range where it can go higher. PST volume.
Yeah, I got out NCVs. Didn't like that we reacted before Dogecoin high of day. NTC holding the 9.
INTC volume.
Close the position from the backside. Maybe I will incorporate later. We break this consolidation out.
I'm all out of UPST.
Chaos of President Trump and his president Elon Musk. From on-again, off-again tariffs to on-again, off-again layoffs for tens of thousands. On-again, off-again cuts in domestic grain purchases. On-again, off-again support for medical research. Now, President Musk and his own
CVS going for that highs. Let's see.
Powell is about to talk, to speak on the house. So, just to have in mind.
Hughes and Spider breaking the EMA.
Yeah.
Do we have economic data right now?
Powell is about to speak. She's not speaking right now. Warren is speaking now. The introduction. Powell is going to testify to the Senate Banking Committee. Sorry. Powell is speaking now. He's having like a fractional lead.
CVS coming into high day. Drill, baby, drill. Sell, baby, sell. CVS into high day.
Are you shorting CVS?
No, I'm selling into this highs. I'm holding a little long.
Oh, okay.
Just drilling the 5 and the 9 EMA. I'm just looking.
Yeah. It's kind of tricky right now because of the news development. So I just took a throw on the cues on the also the night man, just holding that. My only position there. I'm hands off, looking if what happens. But this testifies is long, right? It takes long time because it seems like a lot of introduction and many people are talking. So I think I will take a break. Um, See you guys later.
Alright, man.
Recording in progress.
Good. Okay, awesome. Let me get some charts going. And we are on to day 3 of our Catalyst week. Today we're going to spend a little more time talking about markets because we obviously have an interesting market setup here. And then we're going to follow that up with a discussion on breaking news catalysts and how we impact those, or how we adjust to those. Basically, how we score them and what we plan to do with them. Hopefully this week is helpful. I definitely know that for traders starting out, it can be easy to overvalue catalysts. It can be easy to assume that all catalysts are the same, and it can be easy to not recognize when you're in a trade that has a tremendous amount of edge because you don't truly get how important the catalyst is. This week is all about a resetting of expectations. This week is all about allowing you to adopt the mindset that professional traders use. Even as an independent trader, as a developing independent trader, as a aspiring professional trader, all of those levels are different levels of development in your trading. The core theme remains very true. After hours, was sitting there talking with some traders and on our desk, it's dark out, it's cold, it was going to snow, it was nasty, all that stuff. And we were all just sitting there and talking about the trading day from yesterday, the trading days we've seen. And then we started talking about the opportunities that might show up today. And we obviously had CPI. Here, let me change my chart. We had CPI. And CPI was this catalyst that we knew was coming. So the conversation quickly turned to different opportunities that might be presented because of what was happening with CPI. Now, we started with if CPI comes in line, we're kind of just sitting in the middle of the range. So we're probably not going to get a whole lot of really anything. If CPI comes in really light, and really light meaning about what gauge do you think? What percent light do you think we could have been in order to feel like we had some edge to an upside trade? Just anybody throw out a number. 5%, 1%. What's up?
2.8%.
How much?
2.8 on the year over year.
But what percentage miss would that be? Or what percentage beat would that be? I guess beat would be appropriate there.
Like 3%.
So what was the expectation?
2.9.
It was what?
2.9.
Yeah, it was right around 3, right? So if it's 2.8, is that like something of significance?
Not so much.
Not really, right? 2.7, is that of significance?
Yeah, it's better.
2.6, is that of significance?
Yeah, I would say yeah.
Why?
That will be let me see. Like 10%.
Right about 10%, right?
Yes.
Okay, let's go the other way. From 2.9, is 3% significant?
A little bit. Yeah.
Not really, right? Is 3.1% significant?
Yeah, more.
More. Is 3.2% significant?
Yes.
Yeah, 3.2. So that's kind of the range that we were thinking about. 10% in either direction is significant. That immediately puts us into what category? If we were to score this catalyst,
Eight.
If you miss or beat by 1%, what would you score that catalyst?
Probably like a 3.
Like a
Four.
5, right? 5 or 6. Like it's significant because it's different than expectations, right? But it's not crazy in either direction, is it? What about a 2% miss? I'm sorry, like a 3% miss, like you missed by one more point than that. 10, 20% miss, and then 30% miss. So 20% miss or beat. 7, significant, but nothing crazy. Kind of just on the threshold of importance, right? Just important enough that you want to pay attention because other people could be paying attention, but not important enough that you should have like really sort of any directional bias. Just know we might get a little more volatility, right? What about that 10% miss?
Probably 9. 8, 9.
Yeah, like maybe 8.5, right? And the reason being is if you're 6, 7, 8, that's a linear importance, right? Is anything that we do truly linear? This is not how the importance goes in either direction, is it? If this is like flat, and this is our 3 different thresholds, this is not how the importance factor goes. It's not a linear relationship, is it? It's much more of an exponential relationship. Whereas you deviate more from the mean, you get a much more exponential sort of relationship. That's the baseline for all catalysts, is against the expectation, there isn't a linear relationship higher and lower. There's actually an exponential relationship higher and lower. And that's part of the discussion we were having yesterday is like, if you have those beats, it doesn't go from a 6 to a 7 to an 8. It goes from a 6 to a 7 to an 8.5. What if you would have had a bigger thing than that? Where would it have gone? Probably right to a 10 almost, right? Because that's a big miss or beat in either direction. And month over month is less of a viable metric than year over year. The year over year is a big thing. So, I think it would probably go almost immediately to a 10. And so maybe we do have to score our 9 or our middle catalyst, kind of where we fell at that 10% level. Maybe we do have to score that closer to like an 8.2. Does that make sense? So we maintain that exponential relationship. But you always want to be thinking about these things in exponential terms, not linear terms. Things that are going to grow revenue a significant amount in a short period of time. Is that a linear relationship to things that are probably just sustaining a revenue growth? It's not even close to a linear relationship, is it? In the minds of investors. It's not even close. They're not comparative. So what winds up happening a lot when you start scoring catalysts is pretty much everything gets scored a 7. And then extreme things get scored a 10. That's probably what's going to happen. And that's why we're challenging everybody to find a couple other people in the Discord. And when you find those people, start sharing your catalysts and the scores you're giving your catalysts. And challenge each other. Say, is that truly a 10 out of 10 or is that like an 8 out of 10? Is that really a 7 out of 10 or is it more like a 4 out of 10? And score them on a sliding scale of positive and negative, okay? It's a really good way to do it and a really fast way to make sure that you're putting yourself in a good position to be able to make the adjustments that we feel like are necessary when you're scoring catalysts. If you're not doing that, you're actually probably holding yourself back just a touch. And you're not giving yourself the opportunity to make adjustments to significant catalysts. Now, again, we score this catalyst independent of the response. The catalyst just gives us a guide of what the response could be. So let's say we had a negative 8.5, 8.2, something like that catalyst today. Is that's what we had, right? If we were right around there, where would I expect price to go? Just looking at the hourly chart, where would I expect price to go? Below 600, right? See this little range that's built out, this area of consolidation? I would expect it to at least break the lows. What's the other factor that I would expect it to break the lows with? Volume, right? So when we had this first move down, guess what a lot of us were starting to think about? Okay, we had this little tiny test at 600. We failed. We rolled over. Coming into the open, maybe there's a chance. But is this a situation where I'm going to hit it really hard looking for a pre-market low break on an 8.2 catalyst to the downside with a significant technical break? No. We haven't been trading that way, and that's not really a great trade to take in this environment. Am I going to take it down through open when we fail just below that level either? Why? The question is, sorry, let's go back. Why wouldn't I hit this as a pre-market low trade on an 8.5 catalyst, 8.2 catalyst, negative? Is it a high probability trade? Anybody remember NVIDIA? On the day that we had that DeepSeek news? Do you remember how it went down, came up, and tried to get back above whatever level it was, and then started to roll over at like 10 o'clock or something like that? If I'm hitting pre-market low, I have to endure all that pain. And that was arguably a stronger catalyst and a more important technical area, wasn't it? So we are not necessarily trading in this environment that is rewarding momentum to the downside. Coupled that with, it's not a super weak catalyst. And this is an important technical level, but it's not something I'm going to be really aggressive with because I don't have that idea. I would rather potentially short pops up into that 600 if you see a distinct turn that occurs. And we didn't. We actually saw a move all the way back up to 602 and a half, almost like a little over 603, which is the low end of the range. Now, is that a different trade where maybe I could take a backside off of that? That's a totally different perspective psychologically. Take a backside there, maybe see if we're turning into something else. And we covered that backside in the reading the tape yesterday, and it just gave us that. Very, very eerily similar to what we saw yesterday. If this was a negative 10 out of 10 catalyst, and we had it coupled with the same technical breakdown, would I be more inclined to hit the pre-market low break?
Yes.
Yeah, I'd be way more inclined to, right? I'd be thinking maybe this is going to be a trend day lower. I'd have a faster expectation of the way things can occur. I would expect it to get and hold below the pre-market range on really significant volume. We haven't done any of those things, and so you adjust your plan accordingly. I don't know that the pre-market NVIDIA pre-market low trade was valid. Maybe it was. I thought it was like a 9.5 or a 9 at least. And maybe it was valid. But you also had that really key level right there. And again, the market context in general, have we been in an environment that is scaring a lot of people? Have we been in an environment where people are saying, I need to hit out of my positions? Not really. Honestly, no, we haven't. Unless you're trading Tesla, we have not. We've been in balance. And so you want to be the one who says, hey, listen, we're more likely just kind of chopping around right now. And then if participation starts to pick a direction, then we can kind of go. Then we can look for more aggressive moves. But we haven't been seeing these things work as well in this tape. Would you consider the pre-market drop and the range afterward influence the decision not to follow through with that pre-market low break? It's tough because it's more about the market, right? Again, if I am scoring the catalysts independent of the response to the catalyst, I can sit there and go, this is a negative 8.2 out of 10. Is it doing what it should do? Should it get outside of this range? Yes. Is it doing it the way that it should be doing it? Not particularly. Not particularly. So I have to be very careful about that. However, I can come in and say, what are individual names that are potentially going to present some opportunity? I can come in and say, all right, this market catalyst is an interesting thing. But unless I get like sort of a failed move higher and then probably a fashionably late after the market opens, I'm probably not doing a whole lot. Maybe I can even wait and get that really good second chance like we saw in PLTR yesterday. Maybe I can get a good opening range break. Maybe I could get, you know, a range break with a puppy dog, something like that. Those are all things that are a little more conservative and a little more in line with what I would be thinking about. Is this a catalyst where I want to be trading it long though? Wanting to trade the market long? Not really, right? Not really. So what are maybe 3 or 4 of the other names that I would want to pay attention to on a day like today? Upstart. That makes a lot of sense. Is Upstart. Let's go through the Upstart catalyst. And what really is going to happen is when you come into the day, you're going to sit there and focus on, okay, what are the catalysts that matter? And then what are the setups that are lining up perfectly with that catalyst and my expectation for those trades, right? So that's how you're going to whittle your list down. That's how you're going to get your list culled very, very quickly from I've got 7 or 8 things that I could possibly watch into I'm probably watching 2 or 3. What happened in UPST yesterday? Earnings. How good were the earnings? We talked about earnings expectations yesterday. They were a beat and raise and guide higher. There we go. And upgrades. Were there any user metrics, you know, kicker metrics that were really important? Does UPST have kicker metrics? Does UPST have kicker metrics? What are the kicker metrics? Loans, thank you. Yes. So users, yeah, you could do users. So how was their expectation? How was that metric relative to expectations? And it's usually captured in the guidance, and it was, but want to make sure we're being clear about this. Much better than expected. And then if you ever really want to come down to it, here's what you do. You just like look at this. Need a maintain by raises price target. B of A maintains underperform but raises price target. Like you can really quickly just look through these, right? And get a good sense for this stuff. Now, one thing that would have been very interesting would have been what on UPST? What could have made this a really good thing? Not just on the setup. Conversion rate increasing. Short interest.
I think they have positive margins.
What's up?
I think it would have been interesting if they had had positive margins.
Positive margins. Yes. That would have been a big, big, big thing, right? So, you know, these are things that you want to be thinking about with these stocks. Okay. You did have, again, so that's why it's a 9 out of 10, right? Why it's a 9 out of 10. You did have a move up into resistance at this 87, which is very interesting. Like right in here where it was at pre-market high and all that stuff. Like right into there, lines up right here or somewhere right in here. So it's a little tricky because of the setup. But when you have the distinctness of a down through open like this, is that a trade that you can take? You've got a little bit of room till you get to that 87 area. So you can definitely take that down through open. Especially when you see the market kind of playing with that really quickly. So that's a good, straightforward trade, right? What are other good, straightforward trades today?
Serious.
CVS. How good were the CVS earnings? I mean, honestly, like a lot of times you can just look at the response and be like, wow, that's significant. But how good were the earnings out of 10? And why?
I would say 8.5. They have the beat on EPS and beat on revenue. And it was a very good beat on the margins.
Anytime you see something like this statement, the few, right? When stocks are beaten down, when people are very concerned about how they're doing, and then they come out and have good numbers, doesn't that help it a lot? That is a resetting of expectations, right? That is a resetting of expectations. There are entire groups of companies that are investors that only look for companies that are beating expectations like this, and then they make bets that they're going to continue to beat expectations. So it becomes a very important factor. Is that the sort of trade that you can take? I know it's not pre-market high. Pre-market high was up here, but look at that long range right there at 60.50. Is that like a pre-market high break trade? You could even say 61. Like any of those are perfectly acceptable trades. These are all very acceptable trade. Are you curve fitting the trades? Let's go ahead and challenge me on that. You have an 8.5 catalyst, right? You have an 8.5 catalyst because they beat the expectations, right? Then you have a gap above a key resistance area at 60. Would I take that trade? Setup's bad on higher time frame. Why is it bad on a higher time frame? This 60 seems to be one of the more important levels I've seen, right? I'm happy to be wrong here, and anybody can challenge me that you want to, but like, if I'm looking at this, is this a very important level, that 60? I'll take 60 into 65 all day. Right? If it was gapping below 60, that would be a little bit different. But the fact that it was holding 60 the entire time is very good for that trade, particularly when post CPI, what was happening to the rest of the market? Did CVS seem to care at all?
No.
No. Didn't care one bit. So that's an important factor as we're going into these trades. All right, what other names should we be thinking about? Because we can go through the catalysts and other names too.
INTC day 2.
Yep. INTC day 2 and SMCI were the ones that I was going to cover. Would you rate this better than UPST because of no reaction to CPI? Not really. I think it just happens to be when something's lined up at a really key important technical area. Plus it's beating earnings. Plus there's there was a lot of comments about it being bad. That's the sort of situation where I'll be like, okay, maybe this is going to be a really good long. If this was at $59, I probably wouldn't even be looking at it. But at $60, it makes a big difference, right? Let's look at SMCI first. SMCI had, what were the earnings in SMCI?
They miss on the APS by 4% and miss on revenue by 1.8%.
Yeah, not great, right? But not horrible. And then they came out and on the call did what? They filed, right? Or filing, right? So is that a giant concern off of this one? That's been the story. The filing, if you need to go back, you can just probably in the Inside Access AI tool, you can actually type out, you know, why does the filing matter in SMCI? And I bet you it'd spit out a really good response. What's interesting about this response, though, is that you can see it was up a little bit in pre-market and then it kind of gave it back. Has this done anything? Not particularly, right? And you have this little interesting setup at 42.5. And so just like, you know, you can see if this was really good, should this have been holding basically above 43 the entire time? I mean, if this was really good and investors weren't worried at all, this should have been above 43 and holding way above 43. The fact that it was below 43, again, we go into the CVS and it's like, would I be looking at this above 43? I mean, below 43? Not particularly. Because what is that telling us?
The sellers had resistance.
Yeah, people aren't, more importantly, people aren't hand over fist trying to buy this, right? They're not aggressively trying to buy this here. So it kind of allows me to think about it like, All right, I like kind of a lot that they're saying, but isn't this a potentially a little bit confusing catalyst and setup then? So I'm taking a little bit of a step back from what, if I'm ranking these in level of importance, right? There you go. Darius, thank you for using that AI tool. It actually was really good. That was a really good response too. Wow. And that's just run off of our meetings, which is pretty crazy. So, thanks for using that tool. So this is where I'm kind of devaluing this one. When it comes in and gives this rubber band later, could I trade it? Especially down into key support? Yeah, sure. When it fails kind of right in here and gives a little bit of a fetch, but could I trade it? Like I wouldn't really force it. It's just more, I'm thinking this is a little bit of a confusing news catalyst, so I'm not really forcing it in either direction. Does that make sense? Let's look at INTC day 2. So what happened with INTC yesterday? Jason.
Yeah, so Vice President Vance came out and said that they're going to place an emphasis on creating chips within the US. And INTC is one of the bigger manufacturer of US chips.
In the US, right?
Yep.
So we had a really significant move to the upside. And then what happened right into resistance?
It bounced.
What's up?
Oh, into resistance?
Yeah,
I
yeah.
mean, it sold off, yeah.
I mean, it failed really cleanly, right? Yesterday. And then you come into today and it's starting right above there. But is that the sort of trade where you're going to buy it above resistance at 22?
No, probably not.
It's a tough trade to take at 22, right? Because there's so many unknowns. But when it pulls into day 1 support at 21, is that a good trade?
Yep.
That's a really good trade, right? It's a really good straightforward trade. And then you can take almost a rubber band style entry. And you can look for that continuation and see if it grinds itself back up to 22. Valid question. Intel yesterday didn't close top 20%. Do you still consider it a good second day play? How important is this catalyst, do we think? I think it's a good second day play when it comes into key levels. I don't think it's a great second day play when it's holding 22. Does that make sense? And so this is where having alerts down 2140, 2120, 2110, all that stuff, like having those alerts is great. Because then all of a sudden you don't have to be watching it and it starts to pull in and then you're like, oh, okay, I know that this is a really important level. I can take that trade. Are there any other names we should be considering today?